customers' investments were offered returns of up to 20% on an annual basis by Bitcoin lending platforms such as Celsius, Anchor, and Voyager Digital. These platforms were well known for the absolutely astounding returns they offered. But now, because of the decline in value of tokens, several cryptocurrency exchanges have been compelled to temporarily block or restrict withdrawals, which means that a significant chunk of the cryptocurrency's wealth is currently frozen. And Voyager is the most recent victim. But how did Voyager reach this? And what should its investors make of it? Hello and welcome back to the channel. Are you a victim of any cryptocurrency exchange going bankrupt? And how do you think these exchanges go bankrupt in the first place? In today's video, we look at how major crypto broker Voyager Digital did suspend all trading, deposits, and withdrawals, and what has become of it. But first, before we get started with today's video, please subscribe to the channel, post a comment, share the video, and don't forget to give it a thumbs up. So let's get started. According to a statement that was released by Voyager Digital on Friday, July 1st, the company has temporarily halted all client trading as well as customer deposits, withdrawals, and loyalty rewards. Stephen Ehrlich, the chief executive officer of Voyager, stated that it was a challenging decision to make, but they believe that it is the right one given the current state of the industry. It was further explained that this decision was made to allow more time for the company to explore strategic alternatives with various interested parties and that they will release additional information at the right time. The fact that Voyager issued its announcement at a time when the Bitcoin market was being roiled by many margin calls and defaults is not a coincidence. Since their all-time highs in November 2017, Bitcoin and Ether, the two cryptocurrencies that see the highest trading volume, have both seen declines of over 70%. Additionally, the failure of the UST stablecoin in May sent shockwaves through a market that was already unstable. After a client of Voyager's failed to make payments on a loan worth $300 million just days before, there had been growing concerns about a bankruptcy contagion that might spread throughout the business. According to information provided by the broker, the prominent cryptocurrency hedge fund, known as Three Arrows Capital, 3AC, defaulted on a loan of $670 million. Voyager was then working toward recovering from the effects of 3AC. As of the 24th of June, Voyager reported a combined total of $137 million worth of US cash and cryptocurrency holdings. A credit line of $200 million in cash and USDC stablecoins was also available, in addition to a revolving credit line of $380 million from Alameda Ventures, which is a quantitative trading firm that was formed by the same person who launched FTX, Sam Bankman-Fried. In the first week of July, Alameda made available to Voyager a credit line with a maximum limit of $500 million. Voyager had already used $75 million of the available credit, but it would appear, however, that this was not sufficient to keep things running smoothly. However, the investors in the world's two most valuable cryptocurrencies have not been fazed by this development. Bitcoin prices have increased by around 2%, and Ethereum prices have increased by more than 4% as of the close of normal trading hours on Wall Street. Voyager's rival, BlockFi, is another cryptocurrency lending provider that has lately been impacted by a shortage of liquidity. On June 13th, another significant cryptocurrency lending platform known as Celsius suspended all account withdrawals, swaps, and transfers due to extreme market circumstances. But what are the dynamics involved for all these exchanges to be facing struggles all at once? Bitcoin exchanges may be broken down into one of two primary categories. The first is centralized platforms that are managed by management and owned by shareholders. Managers devise regulations and work hard to elicit deposits of money and cryptocurrencies from customers, while subsequent investment decisions are dependent on the customer's contributions to the fund. In the event that the investors are profitable, the platform, together with its equity investors, will keep any gains, while the customers would be paid the yield that was previously agreed upon. Stockholders stand a good chance of becoming wealthy if they put their money into a platform that is in demand, profitable, and employed regularly. On the other hand, traditional financial institutions function in a manner that is analogous to this. Then, there are platforms that aren't governed by a centralized authority, decentralized platforms. This often just means that the individuals who use them acquire a cryptocurrency token with particular economic and governance rights rather than a piece of ownership. This applies to customers, depositors, borrowers, and anybody else who uses them in any capacity. And even if there could be some managers, only the people who hold governance tokens have the authority to make changes to the regulations that govern the platform. So, customers who utilize the platform to invest their money and who are in possession of governance tokens do have the ability to vote on the investments that are to be made, and they will also enjoy the profits or losses of those investments. If the platform is widely embraced, well-liked, and lucrative, as well as if its investments are successful, then the platform's users, at the very least the early adopters who had a lot of tokens, become wealthy. Now, in order to decentralize a central platform, one strategy is for the platform to declare bankruptcy. The cryptocurrency brokerage platform Voyager Digital Limited, located in New York, went bankrupt after the failure of the Three Arrows Capital hedge fund, which it had financed with hundreds of millions of dollars. This was disclosed during the first week of July, and the company immediately sought protection under Chapter 11 in New York, despite the fact that it did not possess the financial means necessary to compensate its customers. According to a press release issued by Voyager, if the plan of reorganization that has been suggested is allowed to go into effect, customers will be able to recover access to their accounts and would have their money returned to them. Customers who have cryptocurrency stored in their accounts will, according to this plan, receive a combination of the cryptocurrency stored in their accounts, proceeds from the 3AC recovery, common shares in the newly reorganized company, and Voyager tokens. This plan was subject to change as a result of ongoing discussions with other parties and requires approval from the court. Customers will have the ability, up to a certain amount, to select the proportion of their investment that will be allocated to common equity and cryptocurrency that they wish to receive as a reward for their participation. As a direct result of this, you will not be eligible for a refund if you have $10,000 worth of USDC stablecoins or 10 Bitcoins in your Voyager account, although you might get a fraction of your assets back. Voyagers Data, as of the 30th of June, reveals that the company had at least $2.3 billion in assets, with approximately $650 million in loans to Three Arrows. So, if everything else is in good financial standing, customers should receive 72 cents on the dollar. However, this is still purely speculative. You will, however, be compensated by receiving shares of Voyager's remaining stock. These shares will enable you to take part in the growth of the firm in the years to come. In addition, there is something called Voyager tokens, which is a digital currency created and maintained by the firm. These tokens are mostly awarded in conjunction with the corporation's loyalty and rewards program. By making use of the Voyager tokens that you will have obtained, it is possible for you to enjoy a range of rewards and incentives, including higher referral bonuses and lower transaction costs, priority customer support, improved PIK interest rates, and access to special events. Additionally, you will get a portion of Voyager's claim against Three Arrows, which is also bankrupt. It is assumed that the bankruptcy procedure will ultimately result in a repayment of a certain amount of cents on the dollar for Voyager's debt. In summary, because as a customer you own stock shares in the company and loyalty tokens, you then have a direct interest or loss in the most dangerous undertaking the company has undergone. This is the world of decentralized finance. And that's it for today's video. Thanks for your time and attention. What do you think about these recent undertakings involving Voyager? Should people start to be cautious about crypto brokers? Comment below and share your opinion. Also, if you are interested in more videos like this, make sure you like this video and subscribe to our channel. Don't forget to turn on the notification bell for more amazing videos. Goodbye and see you in the next video.